Well, good. When you plug your thing, I'll get to hear what kind of business you have.
Okay.
Yeah, absolutely. I'm going to the Feng Shui event at Unity of Marin on Saturday. You're the fire rooster.
Not just the rooster.
Fire rooster. The
My
fire
friend
rooster.
Susan Fox helped organize that.
Oh yeah, Susan
yes.
Fox, sure. Acupuncture.
Yep.
She used to be. Oh no, she still is the Balance Restored.
Yes.
240 Tamil Vista.
I was a guest on Kathleen's show yesterday.
Oh, were you really?
I
Yeah,
was,
great.
I did,
You gonna share about that today? Oh.
Cross promote.
yeah, well,
Well, her big event is this weekend, but by the time it's going to be the show will air while the people are at the
Right.
event.
exactly, yeah. No, I
feel
talked
like I
about investing in the fund, Mark's fund, and then a little bit about life insurance, but mostly about the fund. This, I got this, and I got a couple of these. Okay, so here's our email questions for Alexandra. Is what are the ways to help our children understand that saving is a smart idea and that the future is bright? For Mark Cooper, it's what's the difference between a lease with an option to purchase, a first right of refusal, or a first opportunity?
Good.
And for Mark Hanf, it is, you have mentioned in previous shows that your fund does not use leverage. Why is that?
Got it.
Okay. Is everyone ready? Once we start, who wants to start?
Well, who brought in something interesting that would be good to start with? Yeah.
I like to have you warm them up first. And
Okay.
I come in as you're the opening act.
Well, I've got an interesting Inman news article, Special Report 2017 Real Estate Outlook. Just has some really key. They did a survey, and the people who responded, all 5 of them, said great things.
Okay.
So,
We'll start off with that.
start with that.
Everyone ready?
Yes.
Here we go. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, and I'm proud to have as my co-host Mark Hanf of Pacific Private Money, one of California's fastest growing mortgage investment firms, Mark Cooper of HL Commercial, and Alexandra Koch of Wealth Plus. For those of you new to our show, imagine a few guys or gals sitting around a bar having drinks without the drinks, talking business with you, the audience listening in. And today we got a full plate. We got all of us here. Our phone number is 888-912-1190. Use that number to answer the trivia questions for 3 tanning certificates given away during this show. And those certificates are not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And today's trivia theme is just miscellaneous trivia. Got a lot to cover. Mark, take it away.
Well, this is our first show of the new year. It wasn't supposed to be. We actually recorded last week's show, but we had some technical glitch, and so we ended up having to run a best of the best of investing.
That's right.
And so welcome everyone to 2017. And so I'm going to start out today a little bit. We've got a couple of real estate guys here today, and then we've got Alexandra to talk about financing and the financial markets and maybe the stock market. But I get a lot of people who call me lately, December and particularly now in January, who are asking me, well, now that Trump's been elected, what do you think is going to happen in the real estate market? Or because at Pacific Private Money, because I'm broker and president of Pacific Private Money, and we provide mortgage investing opportunities for our clients where they can earn approximately 8% on their savings accounts. And so many of my existing investors have called me and say, where do you see the direction of mortgage investing and interest rates that we can earn on mortgage investing through 2017? So I've got this great article here from Inman, a news article entitled Special Report 2017 Real Estate Industry Outlook. And some of the key takeaways here is that there's solid optimism about the housing market going into 2017. It says 27% of respondents say they're extremely optimistic, and more than half expect President-elect Donald Trump to have a positive impact on the U.S. housing market. Interesting. And a strong majority.
So?
Well, it's all based on the questions, right? And that was probably what they
exactly.
Do you expect him to have a positive impact or a neutral impact or a negative impact? Yeah. Well, I believe from his tax cuts and from what he's saying about potentially lowering capital gains tax cuts, which could cause a lot of holders of depreciated real estate to maybe that on the market now that if in fact capital gains are
And not
reduced.
take away the home interest deduction.
Well, that
Right,
too.
right, because that's on the table, apparently.
Yeah.
Apparently, 71% have plans to expand their real estate businesses next year, and nearly 50% believe that unit sales of real estate will increase next year. And another 75% believe prices will continue to go up. So that's actually pretty bullish, because I did feel a lot of trepidation in the marketplace and even among economists right after the election. You know, we're basically saying all bets are off. We have no idea what this guy's going to do, and
Which a lot of us think is still true.
which
I think
that's
the
absolutely true.
only thing we can count on is he's going to do whatever is in his own self-interest.
Can
That's
you
the
say
only
the
thing we
word-
can count on.
Can you say the words
And-
loose cannon?
And the problem is, we do not know what his self-interest is, since he has disclosed nothing of his finances and continues to refuse to do so.
Well,
So-
Alexander, since you bring it up, we're technically not a political show, although over the last 5 years we've tended from time to time to go down that route. You know, I'm one of those California Republicans where, because I'm a business owner, I'm fiscally conservative, but I'm as socially liberal as any Democrat is. You know, I did not vote for Hillary Clinton. I did vote for Donald Trump. He was not my choice for the Republican candidate, but I got to tell you, I subscribe to two local papers, the Marin Independent Journal and the San Francisco Chronicle, and the last few days I have just wanted to barf reading the newspaper because it's just, today especially, article after article after article after article about Trump. There must be 15 articles about Trump in today's paper, and they're all negative. I mean, highly slanted, negative, liberal viewpoint. I'm sorry, it just makes me angry. I want to be.
So far, what has he done? I mean, he hasn't done.
He's
anything
not
yet.
even president
not
yet, and
president
they're already
yet.
calling for impeachment. I mean, just kind of give me a break. Would you shut up?
That's pre-impeachment.
Well,
know?
but the thing is that he could change that by disclosing information that needs to be disclosed. He could change that by following the ethics rules that are recommended.
Yeah,
in
sell
terms of
everything.
divesting
At fire
business.
sale, his billions and billions.
No.
That's just never going to happen. That's so unreasonable to even suggest.
I'm just
that.
saying that he feeds the frenzy to a certain degree.
He absolutely does. I agree with that.
Well, again,
He's,
and what I've said is that the election, I don't think was a pro-Trump as much as it was an anti-Hillary.
or
no, I think so.
anti-establishment.
Or anti-establishment.
Yeah, again,
No, I agree.
again, not trying to make it a pro-Trump show, but just
It's
gosh
not a
almighty.
Not a worry.
So, Mark Cooper, what do you say on the commercial side? Residential real estate. The report here that's pretty bullish on expectations. Anything on the commercial
I would
side?
say commercial's hot. We had 8 big sales this year, and I've got 2 more in escrow right now. We're doing our inspections, and there is very limited inventory in Marin County, owner, occupant, investment property. One thing that I'm hearing from people that are doing multifamily apartment building sales is that when the interest rates turns, the apartment building sales are going to dry up because we're seeing a 4% returns, but when those rates climb above 4% on lending, sellers aren't going to sell and buyers won't be able to buy. So that's going to kind of freeze up the multifamily.
Gotcha.
Frees up the
that-
multifamily.
I was
Talk a little
wondering-
about that. in the
Yeah,
next segment.
I was wondering if it would necessarily dry up, or would the sellers come to a more realistic value? That
Why sell now?
Cap rates, beware.
Yeah,
Exactly.
absolutely.
Okay, tell you what, we're going to cut to a very quick commercial break here. Want to make a quick mention here for visiting San Francisco's legendary Alexandra. I got you on the show here.
Told you it was a non-Trump
Yeah,
show.
that's right. Yes. Alcatraz Island. Planning ahead is a must. Check out www.alcatrazcruises.com. They provide they got the guaranteed lowest price for Alcatraz tickets. So check them out, alcatrazcruises.com. Okay, here's our first trivia question. What is Moscow's famed opera house? What's the name of that? Okay, kind of a tough one. But once you hear it, you'll go, oh yeah, I've heard of that. Okay, so the first 3 callers we're going to go for with the correct answer are going to win a free Tan Bella certificate for tanning services.
And Belly.
Call 888-912-1190. Don't touch that dial. The best of investing. I'll be right back.
Okay. I'm right in the middle here.
That was good, Alexander.
Okay,
no, I
Alexander,
like that.
Tell
It's
us
fun.
what you really feel
Yeah,
about
really.
Mr. Trump.
People
makes
say
for
that
fun
to me about a
radio.
lot of things.
Yeah, no,
Oh,
that's
okay,
good.
Alexandra, like my staff. Okay, tell us what you really think.
Really?
You might not have intended to go this direction. Is it worth talking about apartment cap rates being so low that they really only have one way to go is up, or is that just not?
Well,
You
I
got
mean,
something else you wanna talk
I'm
about?
not, well, I was gonna address my, option to purchase, first right of opportunity, first right of refusal.
Yeah.
But, yeah, I mean, the apartments are really interesting here, I mean, especially in Marin, I mean, people they're looking into outlying areas, they're going 2-3 hours away. You know, it's tricky, I mean, I'm an apartment guy of opportunity, and sometimes I'll have someone that is looking for exactly that.
Yeah.
You know, it's tough. Marin is more of a trophy appreciation market, and guys that are cap rate driven are not buying
Right.
4 and 5 caps.
No.
Or
Yeah.
1.3 cap that we saw in Sausalito.
Yeah, Sausalito.
Can you believe that?
And it's pro forma too. It's not even
Yeah,
an
was that-
actual rents, right?
Was
I
that-
don't know.
Oh, well, I wouldn't be surprised.
Yeah.
No, and the building I have in Sunnyvale, my broker down there called me and he said, yeah, he goes, if you want, I got a buyer. It's like $500 a foot. I'm going, that's
Well-
getting tempting.
Yeah, I mean, I'm doing $750 a foot in Mill Valley right now with some office buildings.
That's
You know, it
good
depends on
class,
the size.
C plus, eh?
It's owner occupant. They don't care about the return. They just want the trophy property.
Yeah,
That's
that's right.
easy commute.
So I'm more of a B building.
Well, Mark, why don't you go ahead and get into whatever you want to get into
Yeah.
on this one? We're going into 3 8-ish minute segments. So
Okay.
Yes.
got plenty of
Hand me
time.
my questions just so I can make sure I don't confuse it.
Well, this is just.
You can ask it. When
Yeah,
you,
I'll
We're gonna ask it
yeah,
later.
yeah,
Yeah,
okay,
we're not
good,
gonna do it right now.
yeah. Okay.
Okay, ready?
Yep.
Here we go. Welcome back to The Best of Investing. Edward Brown here, along with Mark Hanf, Mark Cooper, and Alexandra. That's a mouthful. Okay. First trivia question was, what is Moscow's famed opera house? What's the name? Anybody?
Is there like a Bolshevik in there?
Close. The Bolshoi
Bolshoi.
Theater.
Bolshoi.
Wow.
Wow,
Theater.
good.
Very good.
If
Okay,
you'd
we give you
said,
credit for that.
where does the ballet perform, I might have gotten that right.
I think so.
Ah, okay.
I don't think about operas.
Okay. Well, you know what's funny? My mother-in-law was actually part of the Ballet Russe de Monte Carlo.
That's right.
Yeah,
I met her.
Yeah, that's right. In fact, yeah, because
Saw pictures from
his daughter.
black and white.
Yeah, very
Wow.
cool. Mark Cooper, you were talking about apartment cap rates, and did you want to continue?
Well,
on,
I'm
or-
sure we'll jump back in there a little bit. I mean, a lot of apartment guys are cap rate driven. They're looking for a return, and you know, some guys won't buy anything less than a 5% return. Now, the interesting thing going on here is a lot of these guys are leveraged, and it's not just the cap rate; it's the cash on cash. So, as these interest rates go up, the cap rates are going to go down, or people are going to have to put more money down to make those deals happen. And the 4% return in southern Marin or 5 in the outlying parts here are just, they're not tempting enough now, and as those rates go up, they're even going to go worse. The rents are going up.
I'll buy at a 2.5 cap
There
if
you
I can
go.
get a locked in 1.5 interest rate for 30 years.
There you go. Now we're
Right.
talking.
And on a
Yeah.
commercial loan.
Exactly.
With the little spread there. So you know, sometimes there's a guy Stephen Level that I like,
Uh-huh.
and he's doing a lot of deals. He's doing a lot of big deals, and I think, God, I should just do multifamily. Forget all about we had a banner year. I added it up. We had over 75 sale and leases last year for myself and some agents that are working with
Wow.
me.
That's
So
pretty amazing.
so that's pretty cool. Each year keeps getting better and better. But I'm a generalist. I do a little bit of everything, and I'm selling warehouses. We're doing bars and restaurants, and I'm doing leases, office leases. I've got something pending here in your building, but I can't just do apartments. I get stir crazy. There's not enough volume. Not enough volume happening in Marin for me to be
let
happy.
me ask you about the warehouse thing, because I thought of this before. I heard that Amazon was hiring 100,000 people, but I'm kind of thinking that.
Yeah, and what are they going to pay them?
Well, no, what I'm thinking is not so much what they're paying the employees, but if they're gonna need warehouses, right?
There's warehouses
Not
all
around
over
here.
America.
Yeah, not
Just-
around here.
Yeah. Well, yeah.
Right.
Yeah, I mean, one interesting thing I'm seeing on warehouse, I would say about 2 years ago, I probably had 10 warehouses for sale or lease, and I couldn't give them away.
Yeah.
Okay, I couldn't give them away. We were thinking about alternatives. Park your trailer inside the warehouse and live there.
Yeah.
So now the warehouse market has gotten so tight because over the last nothing has been built much in terms with a roll-up door since the Vineyard project in San Rafael.
Oh, yeah.
And what's happened is The warehouse is in such high demand, I'm getting over $2 per square foot for warehouse in Marin County.
That's incredible.
Wow.
That's more than I'm getting for some office space I have. And these
Wow.
things have no air conditioning, no insulation, just a funky warehouse. I did a deal just this week. The guy prepaid a year over $2 a foot for a warehouse in San Rafael because he wanted it, and he'd been beaten out so many times, bidding wars on warehouse.
What kind of business?
Well, this one in particular was a guy that wanted to do a ceramic studio. And he wanted to do, a ceramic artist.
Yeah.
So he wanted to do a ceramic studio, put a small electric kiln in there, and this building was sprinklered. It was the right size, and he just jumped on it. I mean, and I got 4 walls of roof and sprinklers, and I got a line of people and to pick from. So, so that was good. But the guy wired the money. We took a wire deposit for the full rent for a year and the security deposit, and hand over the keys. And so I'm out of warehouse for lease right now. I've got a couple for sale, but warehouse right now is on fire. Now there's trends. I mean, retail is always in demand in a good location. Office market is picking up, but I do a little bit of everything, and it keeps us real active, and it's exciting. There's a mix of stuff. So
Got a question for you, Mark. So Edward and I went to a capital raising event in Florida not too long ago, and all the people there that were looking to raise money, and the audience was people raising money and people with money to lend out, a lot of family office and other high net worth individuals. And the vast majority of people I talked to who were raising money to do multifamily syndication.
Yeah.
So that obviously is the hottest thing going right now. And then if you're taking the Warren Buffett approach, look what everybody else is doing and do the opposite. What would the opposite in commercial real estate be from multifamily? Because it seems to me that there's too many people chasing that
I
market
would
right
say
now.
stay home, do nothing, or play golf. Just stay out of the market altogether.
I know. I mean, there with the tin cup. Nobody put any money in my cup.
I
You
mean,
have to sing if you want.
the challenge here is we have
Or not.
there's very limited undeveloped space in Marin County.
Yeah.
So, and people want to get the top dollar for it. So, and it's really tricky. I mean, I see some of these multifamily developments. I mean, we had the guys from PFI on the show, and they just said you can't make money building new living space in Marin. It's just impossible. You got to repurpose existing things. I could see if it was a nationwide thing, I'd say absolutely multifamily. I'd go near UC schools, University of California, UC Davis, Merced. I would do something like that. People always need a place to live. The last recession we saw, the warehouses, why did I have 10 vacant warehouses? Because everybody just worked out of their house. They moved out.
Oh, yeah.
Okay, everybody
Well, in fact,
downsized.
one of those groups that Mark and I met was out of, I think it was Vancouver. So they were in British Columbia, and they were doing it with dormitories and stuff like that. So again, like you said, close to the.
But obviously in Marin County we've got a different function. But I was speaking more generally on a nationwide level. If so many people are going after multifamily, would that be a smart place for someone who's looking for investment property right now on a statewide or West Coast wide? Other than multifamily, what other commercial real estate?
I mean, I like retail with a good anchor in there. I mean, we're seeing projects with like a Dollar General, Dollar Tree, maybe on O'Reilly's Auto Parts, Sherwin-Williams Paints are huge. I mean, there's some things that you can't sell over the internet, like auto parts, oil.
Oh, yeah.
And so we're working with a few exchange buyers looking all over the United States for good
Wow, that
returns.
makes sense.
Plutonium.
Yeah, plutonium.
That's always had a lot of
And then another thing that was popular were the Rite Aid and Walgreens, and I saw one in Tucson that came up at about 5.5 cap rate at the asking price, and multiple offers on that, like Rite Aid, Walgreens, but there's talk of them consolidating, so that's tricky. I mean, I'm hearing about JCPenney and Sears, but I would say small retail centers with a good anchor, something you can't sell over the internet, and multifamily would be my pick of the year. Really, and I think over the long term, you always need a place to live. You don't always need a place to park your boat or your RV or your tractor in the warehouse. The man cave can go. When push comes to shove, you don't need the man cave, right?
That's right.
Okay, tell you what, we're going to cut to another commercial break. When we come back, we're going to ask Alexandra some questions, all right? Okay, so we already mentioned Alcatraz, and you guys ever been to Beach Blanket Babylon? That's all, folks.
Babble.
Blanket Babylon, yeah. Got to check them out. They got some fun stuff, especially with the election and all that. You should see the Donald Trump hair. It's a crack up. Okay, here we go to another trivia question here, which is, in The Simpsons, Mark's favorite cartoon,
Oh, I've got this one.
who said, "I thought I'd get into shape, so I've been drinking nothing but milkshakes"? All right. Which which character said that? The first first three callers with the correct answer win a free tan wellness certificate for tanning services. Call 888-912-1190. Don't touch that dial. The best of investing is going to be right back.
Well, who other than Homer?
It's got to be Homer. He had another one that said he went to this all you can
Could be
eat
Babu
buffet.
though. Maybe Babu. said,
Babu.
I want to drink milkshake.
Please do not feed peanuts to my God. Remember that?
What did he say? He goes to this all you can eat buffet, and they try to kick him out. Right? They go, sorry. He goes, do I look like a guy that's had all he can eat? Trying to
That's
get back.
funny. No, I like where someone Homer comes into Babu's place, and he's got the Indian, the god of
Elephant
the
or
elephant.
something.
Yeah,
Right.
exactly. Yeah. And so, ooh, an elephant. And so he takes some peanuts. And so Babu, please do not feed peanuts to my god.
Was it Ganesh?
I think
Was it
that is
elephant?
Ganesh. Good one.
Yeah, yeah. Was
Wow.
it Ganesh? I'm listening to Brotherhood right now with Deepak Chopra and Sanjeev Chopra, and it's very, very interesting.
Wow.
It's about their growing up years in India, and then they both immigrated to the United States, and so it's their stories when they got here, and they're both doctors, but they took totally different paths, and I just find it fascinating.
When
Nice.
Mark and I were at this event, there was a guy who was with a nonprofit organization from India, and so I said, I said, is it true that there's like 200 million Indian gods? He goes, actually, it's closer to 300 million.
Yeah.
He's being
300
serious.
million Indian
Yeah,
gods.
so there's a god for a pen, there's a god for this,
God of
yeah.
pens. I love the god of my purple pen.
Yeah.
The god of purple pens.
Look at that.
God of red paper clips.
Yes.
Purple
Okay.
gel pens.
Yes. Okay.
Good.
We'll answer the question, and then why don't I just get to your email question?
Okay.
Go on from the other
All right.
you want.
Okay.
Here we go. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money, Mark Cooper of HL Commercial, Alexandra Koch of Wealth Plus. Can't tell the players without a scorecard here. Okay, second trivia question. In The Simpsons, who said, I thought I'd get into shape, so I've been drinking nothing but milkshakes?
Well, who other than Homer would it be?
I'm going to give a second to Homer.
Who was the dad's name?
Homer.
Okay.
Oh no, Bart. Oh,
But that's
no, I'm gonna
not
guess.
correct.
I'm gonna guess
Is
Bart.
it Babu?
No, I'm
Guess
going to
Bart.
say that. I'm going to say it in the voice, and you'll be able to figure it out.
Oh, it's Barney.
No, there's no Barney.
Is it Barney? What's that guy's name?
No. Krusty the Clown.
Oh,
that's
that's
right.
right. Krusty the Clown.
Yeah, my wife said to stay in shape. I said Brown. That is a shape. Okay.
I've heard that
I watch
before.
more Family Guy than Simpsons
That's
these days.
true. That's true.
And South Park.
Okay. Yeah. Okay, Alexandra, we received an email here. It says, what are ways to help our children understand that saving is a smart idea and that the future is bright? That sounds like it comes from Donald Trump. The future is bright.
Hear me.
Yeah. Censored. Oh.
Yeah.
Well, so I think what's important is to start with your children when they're young. One of the things that my husband and I did that I always thought was a great idea was we started giving them allowance when they were in kindergarten.
Good.
And the idea of giving them allowance then is that they have to save half of it,
Yep.
and then they can spend half of it.
Okay.
So it starts to get them into the savings habit early, and then the money that they save, they can use to buy something bigger. Not buying candy at the store. Kind
Okay,
of thing.
and did you also give them chores to do it, or were
No.
they were just
No,
giving
because
allowance?
no,
Okay.
because I really believe that there shouldn't be only a connection between money and work. There should be a belief or an understanding that money can come to you because that's how the universe works on a metaphysical principle. So yes, they had things that they were expected to do, but that was not tied to them getting an allowance.
So
That
when
was
I
something
charged
separate.
my kids room and board, that was not a good thing? When they
Well,
were 6?
hopefully, I was going to say, hopefully they were older than kindergarten when you did that. But and then over time, as they got older, of course, we increased the allowance. So when they were 5 years old, we used to give them $5 a month. And then when they get to high school, then they're getting $14 a week kind of thing.
Sure.
And they have to save it, and so then they have to save half of it, and then that helps them to understand what it means to save.
I understand that principle. I'm a little curious about the non-connection of work and pay, because when they get into, quote, the real world, they're going to be expected to work in order to get paid. How did you bridge that gap?
Well, by the example of their parents working and getting paid and talking about that and understanding that. And they also, we worked with them to start some of their own little businesses. So they used to pick blackberries and sell blackberries and make blackberry pies and sell those. So we taught them those principles through other means.
Yeah, I did the same thing with the kids with the lemonade stand. We lived on a very good corner, and I told them, I said, I'm going to be your banker. And the kids were 8 and 3. I gave them $10, and I said, hey, we're going to go to the store. The first $10 you make comes to me. You get all the profits. I'll provide
Plus interest.
I was going to charge them interest. I said, don't tell anybody. I'm not charging you interest or points. But I said, I'll provide the water and ice for free. I figured I'd be magnanimous. And those rascals made a lot of money.
So Alexandra, I know you're a financial advisor and you do more than just, recommend, investments and stocks for your clients. But I'm just curious on your take. It's, there was a big run up in the Dow recently, and it's just kind of stopped just shy of 20,000. It doesn't seem to be willing to hit and go over that. Is it? Do you think that that's more psychological than anything else, or is there something real behind the stock markets and how it's priced right now?
Well, I think that part of it is the conversation about what's coming next. That there was a lot of enthusiasm saying, oh, well, we're probably going to get tax reform, and maybe we're going to get infrastructure spending, and we're going to get other kinds of spending, and that's all going to be good for the economy. But I think now there's, a little bit more of a reality check coming into play and saying, okay, well, those things are all great, but are they really going to happen? And or how long is it going to take? And so part of the dialogue is, well, maybe the market has gotten a little bit ahead of itself. And so that's why
So it's not that
people have
magic 20,000
well, I mean, maybe for some people, and there is an expectation that if it gets to 20,000, then there may be a bunch of selling. I mean, there was also the thinking that if there is going to be tax reform, then you'd be better off selling in 2017 than you were in 2016. And so there's a little bit of a concern about stock prices going up, very much because of that. Because then if they go up, people go, okay, great, I can make a profit. Let me sell now, because I didn't sell last year. So
yeah, I remember my dad told me in the 60s, he told me that back in the in the 50s, that older clients were telling their spouses, and back then, typically the husband worked, the wife stayed at home, and the husband would tell the wife, listen, as soon as the Dow ever gets to 1,000, you sell. and for a long time, it didn't break 1,000 for that reason. Eventually,
Well, of course, I'm wishing, the stock market went, the Dow anyway went down as low as the low 7,000s in 2008.
Yes.
And I'm just wishing that I had money back then to actually buy
Right.
stock.
Right.
They're approaching 20,000.
It's interesting because I just did a radio show yesterday, and we were talking about this. And in 1987, the market was at 2,000. Today, it's, let's say, call it 20,000. Now, the compounded monthly rate of return on that is only 7.7%.
yeah, no, it's
not that great.
No,
And
it's
That's
not
not much of
great.
an only. That's actually pretty good.
No, it's not because
No,
you think
because you have
about
to
it.
take taxes out.
Well, not just that, but what I was thinking
Inflation
of
out.
is
Yeah.
not just
Ah,
that.
CPI,
But
yeah.
what were interest rates back in the late 80s and through the 90s?
A lot
Not
higher.
higher.
A lot higher.
Yeah, I mean,
a lot
today
higher.
we'd look and say, gosh, if I got 7 point something
Right.
percent, that would be good.
Yeah.
And if you go to the NASDAQ, now this I picked at the high when it just before the dot bomb, right? So it was at roughly 5,000 in 1999, and it's now, call it 54, 5,500,
Right. It took a long time to get back up to 5,000.
Exactly.
Yeah.
The rate of return, 0.43%.
Yeah.
It's terrible.
Yeah.
I'm not trying to bash the market. This is just
Right.
strictly historical facts.
Right. No, just and people need to know that because it's very easy to look at that and say, oh, I can get such a great rate of return. But as I say, you have to take out inflation. You have to take out taxes.
Yeah.
You may have to take out fees if
But
you have a financial advisor.
Exactly. That's a good point. And
so-
everything is based on alternatives. So if you don't do that, what else do you do, and what happened to that rate of return? Tell you what, we have to, believe it or not, we have to do another big commercial break here. If you can believe that. Okay. Quick trivia question. Roadrunners are members of which family of birds? for all you Audubon Society people.
You sure they're a bird?
All right. Ask Wile E. Coyote, he'll tell you. Okay, the first 3 callers with the correct answer win that free certificate from Tan Bella. Call 888-912-1190 to answer that question. Roadrunners are members of which family of birds? Don't touch that dial. The best of investing will be right back.
Okay, I got to stop it last time up to 18 minutes.
I know, I was like, can't look at
All
your
right.
clock anymore.
So let's
All right, I'll get it right.
get your
next time.
questions in there.
Right, we get the next
and
one's
make
a
sure
long
that
one,
we-
right? 9:19. And Alexandra didn't get a chance to give her
Exactly.
information out.
So I'm going to give that
Contact
first
information.
Okay.
about your information.
Yeah, and I wanted to talk about people withdrawing from their accounts, because
Okay.
now is the time when people should be
IRA?
evaluating. Well, no, I mean for any of their accounts, but based on
okay.
Monte Carlo and, like how much should you take out of your account? Because a lot of people think it should be a set percentage, but the reality is that they should be looking at how their accounts performed last year and then use that to determine how much money they can take out of their accounts
Just
this
just
year.
take the proceeds or profits.
Well, not
or-
necessarily,
Yeah.
but that should be one of the
Well,
factors
don't take
to look
more.
at. Don't take more.
Yeah.
Don't take more.
Do you want to start out with that? Because if we get into questions, it might be hard to get back into that.
Okay. Yeah, I mean, it doesn't take very. It won't take very long,
Okay.
but
Okay.
I just think it's important to think about that now.
All right, and then we'll quickly move on. Okay. Time goes fast, I'll tell you. Okay, here we go. Welcome back to the best of investing. Third trivia question was, Roadrunners are members of which family of birds?
The lock.
No.
I've been a crow.
That was a Monty
No.
Python joke.
I am not a bird person. Sorry.
Cuckoos.
Cuckoo.
How about a cuckoo bird? Okay.
Well, their
So-
behavior is kind of cuckoo.
It
So
is.
okay,
It is. Okay.
I can take
So-
that.
Alexandra, 2 things. One, how do people get a hold of you if they need some financial advice?
They can call me at 415-457-8936, or they can go to our website, wealthplusinc.com.
Very simple. Okay, I
Yep.
like that. Okay, and then you wanted to mention a quick thing about withdrawing money?
I wanted to mention a quick thing about withdrawing money because I think it's important for people to understand what they should be looking at to determine how much to take out of their accounts.
And when you
Their
say accounts, just to be clear, you're talking about like stock market,
investment accounts.
investment accounts in general.
Investment accounts in general,
Got it.
yes. Because, if people are retired, because I'm thinking probably some of the people that listen to the show are retired.
Yep.
When people are retired, their focus is wanting to be sure their money's going to last for the rest of their life. And so if you are in the practice of just taking out an average amount every year, excuse me, then you're going to have much less likelihood that your money is going to last. So what you should be doing is every January you should be looking back and saying, how much did I make in my accounts last year? And then take out equal to or better, less than what you made in your accounts the
don't
previous
touch that,
year.
Don't touch that principle.
Yeah. So anyway.
All right. Well, thank you very much for that. I appreciate that. Okay, Mark Cooper from HL Commercial. What's the difference between a lease with an option to purchase, a first right of refusal, or a first opportunity?
Wow, this was actually a question we got by email from a trust attorney that I knew. And they had a tenant who was in place for over 20 years leasing a property. Well, the lease itself said that 1/3 of all lease payments could be applied toward the purchase if they were ever to buy the property. So we did some quick math, and I don't know, $1,500 a month. So the rent was $3,500. $1,500 a month for 20 years would go toward the purchase of this property, which is over $360,000 if they ever bought the property. But we took a look at the lease documents. They were calling it a first right of refusal, and they also were calling it an option. I think the intent between the parties was, yes, this would be an option to purchase with the payments going toward it. Nothing in their release except down in some fine print. But what I would say, first of all, for landlords, I'd stick away from any kind of option to purchase, first right of refusal. I've seen the
even options to renew.
Well, I mean, you could do fair market or something like that with a strong tenant. But in this case, what we saw was the intent was an option to purchase with no option money being paid to the landlord. In fact, they lost $360,000 because they were receiving that as rent the whole time. so if this property were to sell. So there's you typically with an option, we see something like tenant's got an option which must be exercised during this window of time. Tenant pays $10,000 for that option, and the price is fixed at this price.
Exactly. Nice and
Okay.
simple.
Window of time, money change in hands, the price is fixed. In this case, there was no window, no money was really changing hands to the landlord to benefit him, and 1/3 of all rent that had ever been paid for over 20 years would be applied toward the purchase price. The lease was written out very simply, and there was one sentence about that money going toward the purchase. So first of all, I'd say, warning landlords, if you're going to get involved in any of this stuff, use a great commercial broker or a real estate attorney that's going to spell out everything to protect you. Some tenants, think about that as well, because you want to make it clear.
Yeah.
So an option to purchase is exactly that. You can buy the property, but I would suggest that you spell out something about the price of the property.
Yeah.
And then, so that's what that is. First opportunity actually means that, hey, tenant, if I'm going to sell the property, I'll let you know first, and I'll tell you the price that we're going to market this property at. If you want to buy it from me, you can at that price. That's first opportunity. Not really a big commitment on the landlord's part. It's just like, hey, I'm going to sell the property. Edward, if you want to buy this property, I'm about to put it out at $2 million. You've been a tenant for a long time. Would you like to buy it at $2 million? Yes, no. Okay, thank you very much.
So first right of refusal would be our.
We're going to get to that next. So,
okay.
so
Oh,
we've got option to purchase, fixed price and time.
Yeah.
First opportunity, hey, we'll give you a heads up.
Okay.
And first right of refusal actually is really interesting. If I get someone that's willing to
Gotcha.
pay a price for this property, including the financing, is it going to be cash? Is there a loan?
Yeah.
You've got so much time to match that
Gotcha,
deal.
yeah.
And I was involved I represented a buyer here in San Rafael in a medical building. There was a dentist that was a tenant who had a first right of refusal. We made an offer, which was cash. She had 30 days to match that offer. She couldn't. We then did all of our inspections, and we discovered some defects on the property. We went back for a credit. We then had to go back to the dentist and
Yeah.
say, now we can buy this property for less. You've got 30 more days.
Right. Well, that's so it's a bad. So sellers shouldn't be giving away first right of refusal.
First right of refusal is just
Bad for the
really,
seller.
I mean, if you're a tenant and you're strong, maybe, but I don't really see any benefit to a landlord to give somebody a first right of refusal. And I also I've seen some real tricky deals where the landlord said, I'm never going to sell this property. I'll give them the first right of refusal. Landlord passed away, and the trust had 3
Oh.
properties that they were selling as a bulk offering.
Oh.
An offer came in for all 3 properties. The tenant had a first right of refusal, but said, I only want to buy this building.
Yeah.
I don't want to buy all 3. Well, they ended up in court. So I think
Oh, yeah.
here's what I would say
Oh.
is, if you're going to do anything with an option to purchase, a first right of refusal, or even the first opportunity, get a great real estate attorney, and I know a few,
Yeah.
or use a commercial broker who helps you market and sell your property. Make sure all the leases are bulletproof.
Mhm.
And I can see this coming. How do they get
Yeah.
a hold of me?
Yeah. I mean,
So,
that's a good.
Yeah, so it's
great
Mark
questions.
Cooper, HL Commercial, 415-608-1036. My office is here in San Rafael, and my email is mark, M-A-R-K, @hlcre.com. Now, I represent tenants, and I play hardball, so I do see those
Exactly.
option to purchase. But, the big picture, if you want to buy a property, make it a sale. If you want to lease a property, make it a lease. It gets really convoluted
Yeah.
if you try to do both at the same time. And when I've done leases with an option to purchase, we write the lease and we include a purchase contract with it, so that when it's time to exercise that option, all you do is say, I'm buying the property, here it is. You've already
Exactly.
done your inspections, the price is established, and the shorter the window, the better.
All right. Very good. We got to quickly move on. Mark,
Yeah.
Hanf, you've mentioned in previous shows that your fund does not use leverage. Why is that?
So the Pacific Private Money Fund is a mortgage pool fund that pays its investors yield between 7 and 8%. And we just finished the accounting for 2016. We distributed interest at a rate of 7.8%. That was the distributed yield net to the investor in 2016. Now, past performance is not a promise of future results, and we do see a downward trend in mortgage investing rates, but not much further. I could see maybe 7.5% in 2017. Based on the competition in the market space and the loan rates that are there. But That is a pure yield. It's an unleveraged yield. So the fund, the only assets of the fund are cash and real estate secured notes, and the only debt is what we owe to the shareholders for their dollars invested. We do not use leverage, low price, low cost leverage, and the primary reason is that it's for safety features. I mean, some people are really opposed to leverage. I'm not intrinsically. I have another fund we're looking at launching that would use leverage to provide a higher yield, but for safety and security features, and for people who are really looking for safety and security features, you want to look at a mortgage fund. You want to look at options for unleveraged yields, just so in case we do suffer a market downturn again that approaches what we witnessed 10 years ago, that the leveraged funds were the ones that got in the most trouble first, and there was loss of principal. So if you want to reduce your loss of principal potential.
Okay, give out your information, and when we come back, I want to find out a deal of the week.
PacificPrivateMoney.com, PacificPrivateMoney.com for more information on how you can earn up to 8% on your savings and IRA accounts.
All
Give
right.
us a call.
Don't touch that dial. Best of Investing will be right back with some closing comments.
Squeeze that in there.
What happens if you go over? Do they just cut it right off on the show? Or
No, what I do is, if you notice, I start off with a few seconds of silence, and then I end.
That gives them a fun.
Just a little bit.
Yeah. Well, at Thanksgiving week, I was all excited because we recorded on a Tuesday, right? So we recorded we didn't do Thursday because it was Thanksgiving.
Thanksgiving, yeah.
So I'm driving up to Sacramento, and I turn on the radio. I'm like, well, where's my show? What the heck's going on here? I can't hear it. I got the family in the car,
Oh yeah.
and I'm like,
You're
hey,
gonna
we got hold on,
subject
everybody
them
be
to-
quieter. I'm like, no, it was Thursday.
Oh,
yeah.
It was a couple days later. I'm solely Thursday recording, Saturday thing. So 2
Yeah.
days later, I turned on the
Gotcha.
radio. Where am I?
Where am I?
I
I'm
love
like,
listening to the show. It's great. It's fun.
Yeah, it's fun. Like if you, so I don't
This
know what.
equipment's really good, so it's if you're, it's. Have you listened?
No,
Listen to
I
the
haven't.
show?
Oh, you gotta do the show.
No.
You don't like listening to yourself. Or you
No,
just haven't
no,
gotten around
that's
to
not
yet?
it. I tend to forget. I'm
Yeah.
like I'm focused on other stuff.
It's like, it's 2 o'clock. I forgot.
I
about it.
tried to
Yeah,
watch
set
it
your
on.
alarm.
I tried to watch it on TV the one time, and then it wasn't on, and I'm like, oh darn it all.
Channel 26.
Well, I'll be at the
Yeah.
Feng Shui extravaganza there on Saturday. Yeah.
Feng Shui.
Feng Shui. Galen will be there too.
No.
All right, you ready? I'm going to ask you for a deal of the week.
Yeah.
Any last minute?
How much time we got here on the close?
5 minutes.
5 minutes. Okay.
Yeah, okay. Just gonna pass that. Make one very
I'll
quick
do the deal of the week and then any wrap up. So you guys want to throw it?
Okay. Ready? Welcome back to the Best of Investing. Last time for today, Edward Brown here, Mark Hanf, Mark Cooper, and Alexandra Koch. Quick mention here in the heart of Sonoma County, enjoy a unique historical landmark, the Flamingo Resort and Spa in Santa Rosa. Heated pools, tennis, poolside dining, weekend life, music, dancing, health club, yoga style studio. Stay fit while relaxing and touring nearby Sonoma Valley wineries. Visit flamingoresort.com. Mark, give us the deal of the week.
So we work with a flipper who has an investment property that's free and clear, and he uses that as collateral to basically get 100% financing from companies like ours, Pacific Private Money, to buy, fix, and flip properties in his neighborhood. He works out of the Oakland neighborhoods, and so we recently funded a loan where basically the borrower came in with no down payment. In fact, he came in with no money at all. We provided actually more than 100% because if the purchase price at this point was a little under $500,000, we rounded it up to $500,000 to help cover the closing costs and fees, and it became a zero down loan because we obviously got a first position deed of trust on the subject property that he was acquiring for approximately $480,000. We gave him a $500,000 loan secured by that property as well as his free and clear rental property. So the combined loan to value for us as the lender was 53%. So we were thrilled and are thrilled to make loans like that. And we'll make those loans every day. So it is possible today to get 100% financing or more than 100% acquisition financing. We do deals like this all the time if there is other property. Now, you don't have to have free and clear other property. You could have other property that has a loan on it, but as long as it has equity, you can tap that additional equity in order to help lessen the down payment that you need for a target property. This will work for a primary residence purchase as well. Our most popular loan program in 2016 was our owner-occupied purchase bridge loan, which is a loan that you need to repay back within 11 months, but it's great for a quick purchase situation where maybe you're competing with a cash buyer, or maybe all of your money is tied up in your existing home, but you want to use the equity in your home to help you buy that target property. We can provide 100% financing in those situations. So for more information, check us out. Our website is pacificprivatemoney.com.
And I figure that that borrower, he's now putting up 2 pieces of property, so he's probably going to want to pay you back.
He's highly motivated.
Highly
Yes, he
motivated.
is.
That's
And
the
he's making money on these flips, so it's a great business model for him. He's a very smart guy.
Very good. Just have another couple of minutes, or actually a minute and a half. Any last comments, Alexandra?
I would just say that in terms of people's investment accounts, that the best thing right now, since we still have a lot of uncertainty, is to stay the course.
Okay.
You know, keep good asset diversification and asset allocation, and don't try to get too fancy with trying to anticipate what is going to happen next, because we really don't know what's going to happen next.
Voice of reason. Mark?
All right, we were talking options, and one thing to keep in mind, if you're a landlord and you grant a tenant an option, that could prevent a buyer from securing an SBA loan, even on a multi-tenant property. I'm seeing a lot of that. I've got a 7-tenant building in San Rafael, and a owner-occupant came along and said, God, this would be great for my company. Well, 2 of the tenants have got options, and that means that he cannot occupy within a year of close, and that prevents him from getting an SBA loan.
Oh, interesting.
So we're looking at the possibility of buying out some of those options, but that's expensive. So if you're a landlord, really think twice before you give a tenant an option. And you can talk to me about that, Mark Cooper, HL Commercial, 415-608-1036.
And Alexandra, again, how do people get a hold of you?
415-457-8936 or wealthplusinc.com.
Mark Hanf.
pacificprivatemoney.com, 415-883-2150. We're a week away from President Trump. More to be revealed. More will be revealed.
And he come to you for either a loan or if you want to invest money.
That's right.
All right, here's our thoughts for the day. Adversity causes some men to break, others to break records, said William Arthur Ward. I don't know who that is, but it's a good saying. And if you want to find the real competition, just look in the mirror. After a while, you'll see your rivals scrambling for second place. I like that. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
We used to do it with Kramer all the time, and I wasn't sure if you were doing it.
Yeah,
29, was that
right.
5, 6, 7, 8?
Yeah, that's right.
Well, great to see you. I'll tell
Great
you.
to see you too, yeah.
That's great, Alex.